What's going on, guys? Welcome back to another video. So in this one, we're going to be doing a little bit of an update and kind of furthering some of the things that we were talking about in a video a couple of days ago, talking about the overall state of the market and how we are not out of the woods yet, in my opinion. We've received some new data that I want to break down and explain to you guys. And since we're going to be talking about the overall market too and where it could head over the next couple of months and quarters, well, I'm also going to give you guys a little bit of a freebie on Pythagoras too. Again, if you guys don't know what that is, it's our brand new retail geared trading algorithm that is super powerful and accurate at predicting moves to the upside or the downside before they actually happen. If you guys are interested in that, make sure you check out that link down below. You're going to get all of the alerts on multiple time frames, stocks and cryptos, the learning curriculum videos. There's about 16 of them right now, continuously getting added to the live streams, the charts. Again, guys, it's the best place to come and learn how to trade. So if you guys are interested, check out that link down below. But let's get right into the data here and kind of talk about what's been going on. And we're actually going to be talking a little bit about the housing market here. If you guys don't have necessarily a formal education or you haven't spent the time to learn about kind of the different aspects of different markets and how they affect things and how fast they move, the housing market is going to move a lot slower than the stock market or even the crypto market, because when you think about how fast the transactions in the real estate market actually take place compared to the stock market, well, if you had a bunch of shares of a given stock, you could probably sell them instantly. If you wanted to sell your house, it's going to take a little bit more time, so the housing market's going to be a little bit less liquid. But when we're looking at this data here, what we are seeing is new home sales came out a couple of days ago, and they missed by a pretty significant amount. The actual number, 511,000. The median forecast, 574,000. When we come over to this data point right here, U.S. new home sales tumble to 6.5-year low, but the prices are still high. Now, when we think about the housing market in the overall kind of rate environment and what the Fed is doing right now as well, we have to understand that it's a very simple observation that when you raise interest rates, the mortgage rates are going to slowly start to come up as well. What that means is that if you could qualify for, let's just say, for $500,000 mortgage, well, if the interest rates go up, then you no longer are going to qualify for that $500,000 loan, meaning that all of those houses at that price point you can no longer afford. So the demand side of this kind of real estate market here is going to start to fizzle out, and that could see prices start to come down. How much? We don't know, but at the same time, we have to think, okay, as the Fed continues to increase interest rates, the demand for some of these homes at these prices is going to come down, which just based on those simple supply and demand metrics are going to drag home prices down, which could then spill over into the stock market as well. If you start to see big headlines coming out saying housing market crash or the housing market's not doing well and people start to get scared. So that's kind of what we're looking at here with the housing market, but let's kind of get into how everything is affecting the stock market right now and how you guys can actually make a little bit of money in your portfolios right now. So when we're looking at the market here, we saw SPY go on a pretty nice run to the upside here, right around 430. Remember, we did call this out. It ran all the way right up to our target. We did say it was probably going to come up a little bit above 430 to kind of fake some people out and then start that move down, which is exactly what we are seeing here. Now, over the last 2 days, we've seen a little bit of consolidation, and we have this level right here, right around 410 in this 48 EMA on the daily time frame, right around 407.59. If we slip below there, it is most likely going to see 400. Now, again, when we're thinking about the market in the short term, you're going to see a lot of volatility, and over the long term, 5, 10, 15 years, we're most likely going to see the market start to come up. But in the short term, again, when we're in a rising interest rate environment, we're not quite out of the woods yet. So most likely leading into, let's say, September here, that is the month that we are going into. But going into September, we are going to be getting another Fed meeting. Now, Powell is going to either raise interest rates by most likely 50 or 75. I'm under the assumption that he's going to do 75. But there's another argument that he's only going to do 50 as well. But that creates a little bit of uncertainty where we could see a little bit more volatility in the market. Now, that brings us into this play that Pythagoras has recently called out, and this is going to be on Bath and Body Works. So again, Bath and Body Works Works has gone on a nice little run here, but there's a couple of things that we need to understand. First, when we're thinking about 1348 here, we also need to be looking at key support and resistance levels. We have one right here on this daily time frame at around $35.39, $35.40. Currently, it's trading at around $36.85. So if we can break this level of support here, it could easily start to sell off pretty significantly. RSI is still right around 50 here. We are seeing the MACD gain some bearish momentum here, and the shaft trend cycle is signaling sell. Now, when we're looking at the daily time frame here, there's a couple of things that we need to keep in mind. You want to be getting contracts if you decide to play options on a lot of these daily time frame crossovers or predicted crosses. You want to be getting contracts at least 1 month out. Personally, I like to get 2 months just to give myself a little bit more time and kind of limit the volatility that I'm seeing in my account or in any of these positions. But you want to be giving yourself more time, not only to decrease the effects of theta, but if this move is going to continue for an extended period of time, you want your holding period or the expiration time of your contracts to be able to kind of weigh out that entire move to the downside or the upside if you are seeing a move back up. Now, coming back over to this chart right here too, there's a couple of other things that I want to quickly bring up before we wrap up. Bath & Body Works recently just had earnings and paid out a dividend. When you see them pay out a dividend, typically what happens is you do see a little bit of a sell-off after, just because the company was either spending some cash in order to pay out this dividend, or some people were buying the stock up hoping to get that dividend and then selling off once they make sure that they are going to receive it. So there's a lot of things pointing to the downside on this chart right now. Again, that key support level that we got to watch for, the RSI, MACD is looking good, and shaft trend is looking good as well. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this video here, make sure you go down and hit that like button. It costs you nothing to do it. If you guys do want to see more videos like this, make sure you hit that subscribe button. Other than that, I'll see you in the next one. Peace.